Hey everyone, welcome back to Corporate Decoder, the place where we uncover the hidden truths within corporate filings. Today, we're dissecting Great Elm Group Incorporated's latest proxy statement. And let's just say there is a bit of a switcheroo happening with their board committees that's more interesting than it sounds. So what is the big deal? Great Elm Incorporated just filed an amended proxy statement for their upcoming annual meeting. It seems like two of their director nominees, David Schwartz and Booker Smith, are swapping committee assignments. David Schwartz will now be on the Audit Committee instead of the Compensation Committee, and Booker Smith will take his place on the Compensation Committee. It sounds small, but this can signal shifts in focus, especially for audit and compensation. Think of it as reshuffling the deck chairs to steer the ship a little differently. The meeting itself is coming up on the 5th of December, and it is going to be online, so you can attend from your couch, wearing your comfiest sweatpants, and still have your say. They're really pushing for everyone to vote, reminding us that our voices matter in how the company is run. Now, let's talk about who actually owns the company. This is where things get spicy as we look at the stock ownership. As of the 10th of October 2025, they had over 33 million shares outstanding. Some of the biggest owners are investment firms like Northern Right Capital Management LP, Imperial Capital Asset Management LLC, PC Elfin LLC, and Woodstead Value Fund LP. These are the big players, so their influence is significant. And then there are the insiders. Matthew Ad Rapkin holds a pretty substantial chunk at 17.7%. Jason W. Reese, the chairman and CEO, is right there too with 22.2%. Combined, all the current officers and directors own almost half the company at 49.7%. That is a lot of skin in the game, which is usually a good sign for alignment, but it also means their personal fortunes are tied directly to the company's performance. Northern Right Capital Management LP and its affiliates own 15.6%. They're a significant investor, so their actions and views are important for Great Elm. Imperial Capital Asset Management LLC holds a whopping 19.1%, making them the largest single shareholder group. And guess who is the chairman and CEO of Imperial Capital? Jason W. Reese himself, who also happens to be the chairman and CEO of Great Elm. That is some serious overlap and concentration of power and ownership. PC Elfin LLC owns 9.8%. They've had a late filing for a Form 3, which means they became a more than 10% owner, but their initial report was a bit delayed. Not a great look, but hopefully just a paperwork hiccup. Woodstead Value Fund LP comes in with 14.6%. They were responsible for a significant purchase of Great Elm shares in August last year, about 4 million shares for $9 million. They also received warrants to buy more shares later. Plus, they get a board seat as long as they maintain a certain ownership level. This shows a direct strategy to influence the company's direction through investment and board representation. Now, let's move on to who is actually running the show, the directors. For this meeting, they are electing 8 directors. Notably, James H. Huger is stepping down after his term expires. He is not running again, and it seems to be an amicable departure, not due to any disagreements. If the new nominees are elected, we'll see David Schwartz in the Audit Committee and Booker Smith in the Compensation Committee. As we mentioned at the start, this is the key change that this filing is about. Next up, they're asking us to approve keeping Deloitte Touch LLP as their independent auditor. They switched from Grant Thornton LLP back in September 2024. It is standard practice to ratify the auditor each year. Looking at the fees for the year ending the 30th of June 2025, they paid Deloitte about $576,000 for audit services. For the previous year, Grant Thornton charged $568,000. It is pretty consistent, no major surprises here. Then comes the say on pay vote. This is where shareholders get to give a thumbs up or thumbs down on how the executives are being paid. While it is advisory and non-binding, a strong negative vote can send a clear message to the board. And finally, the big one, Proposal 4, the approval of the 2025 Long-Term Incentive Compensation Plan. This plan is designed to replace the old one, which expires next year. If approved, it allows the company to grant up to 5 million new shares as stock options and other awards. This is crucial because it relates to future dilution. As of the 10th of October 2025, there were about 817,000 shares left under the old plan. The new plan is asking for 5 million shares. This means if approved, there is a significant increase in the number of shares that can be issued to employees and directors, which could dilute existing shareholders. The closing price on that date was $2.42 per S-share, so the potential value of these new shares is about $12.1 million. The company argues this is essential for attracting and retaining talent. They believe linking compensation to long-term value creation through equity is key. They also highlight features like no repricing of stock grants without shareholder approval and limitations on non-employee director compensation. It sounds good. But we always have to watch the dilution aspect. Let's quickly peek at how the current non-employee directors are paid for their service in the fiscal year, ending the 30th of June 2025. They get a $65,000 annual retainer, plus extra for committee chairs. For instance, James Sugar, the departing member, received a total of $160,000, including stock awards valued at $65,000. The vice chairman, Matthew Adrapkin, received a total of $280,000, including $215,000 in stock awards and $65,000 for GCC board service. Now, for a really interesting part, the pay versus performance table. This shows how the executives' pay stacks up against the company's actual performance. You can see the total compensation reported in the summary compensation table, and then what is called compensation actually paid, or CAP, for Jason W. Reese. His total reported compensation in 2025 was about $1.25 million, but the cap was lower at around $1.06 million. This often happens because cap adjusts for things like stock awards that haven't vested yet. Here is a big clue about performance. Look at the total shareholder return column. In 2025, an initial $100 investment would be worth $96, meaning a loss. In 2024, it was even worse at $84, another loss. Only in 2023 did it show growth, reaching $95, still a slight loss considering this lack of positive shareholder return. The reported executive compensation, especially for 2025, seems pretty high. And speaking of performance, the net income losses tells a mixed story. In 2025, they reported positive net income of $15.5 million. But in 2024, they had a net loss of $926,000. In 2023, it was a positive $27.6 million. So it is a bit of a roller coaster. Now, what does it all mean? Great Elm Group Incorporated is clearly in a growth phase, evidenced by the push for new incentive plans and significant investments by players like Woodstead Value Fund. The insider ownership is high, which is good for alignment, but the concentration of power with Jason Reese, who holds leadership roles in both Great Elm and its largest shareholder. Imperial Capital is something to keep an eye on. The shift in board committee members, while seemingly minor, could signal a move towards greater scrutiny on the audit front, which is generally positive, especially given any past reporting delays. However, the sheer amount of shares requested under the new long-term incentive plan is a red flag for potential dilution. Investors need to weigh the benefits of attracting talent against the risk of their ownership stake shrinking. The pay versus performance data is the most telling. While the company reported positive net income in 2 of the 3 years, shareholder returns have been negative in the last 2 years. Yet, executive compensation remains substantial. This disconnect between pay and shareholder value creation for much of the period shown is a point of concern. It raises questions about how performance is truly measured and rewarded. Ultimately, Great Elm Incorporated appears to be making strategic moves to position itself for future growth, but it comes with both opportunities and significant risks. The reliance on long-term incentives suggests a focus on future value, but investors need to be mindful of the dilution and the current performance lagging behind executive compensation levels. Alright, that is our breakdown of Great Elm Incorporated's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching, see you next time.